What's happening, crypto enthusiasts? Welcome back to Bitcoin Bulletin, where we dive headfirst into the stories that are shaping the future of digital finance. The news cycle is moving at lightning speed, and if you're not plugged in, you're missing out. Today, we've got some absolutely massive updates that you need to know about. From official government endorsements to major market plays, this is the information that sets the pace. Get ready, because we're breaking down the biggest developments that could impact your portfolio and the entire crypto landscape. Stick around, you won't want to miss a second of this. First up, we're talking about a historic move from the US government that's putting Bitcoin at the center of economic reporting. This is not a drill. We're seeing an unprecedented integration that signals a major shift in how official data is handled. Then, get ready for a major shakeup as a key player, backed by some very familiar names, announces its intention to go public on one of the world's most prominent stock exchanges. This could be a game changer for accessibility and market perception. Following that, we're diving into a significant development in the world of yield-bearing assets, with a major launch expanding access to a popular blockchain network. This move could unlock new opportunities for earning and liquidity. And finally, we're analyzing the intricate dance of market activity, looking at what short-term trends and long-term holder behavior might mean for the future price action. Are we at a tipping point? We've got all the details you need to stay ahead of the curve. Let's get into it. Make sure you smash that like button, subscribe if you haven't already, and ring that notification bell so you never miss an update. Government goes blockchain, a bold move for economic data. This is monumental. The US government is now publishing its gross domestic product data directly onto public blockchains, including the Bitcoin network. This development marks a significant embrace of cryptocurrency technology by the US administration, signaling a potential new era for official data distribution and verification. The US Commerce Department officially announced this groundbreaking initiative, making GDP figures accessible across 9 different blockchain networks, notably including Bitcoin, Ethereum, and Solana. While officials clarify that this blockchain integration is intended as an additional distribution channel rather than a replacement for traditional data releases, its symbolic weight is immense. It represents a powerful endorsement of blockchain technology from a government that was once notably skeptical. According to Bloomberg, Mike Cahill, CEO of Doro Labs, confirmed his involvement in the project for the past 2 months, stating, "The entire administration has embraced this. With today's announcement, we are now in a world where government data lives on blockchains and market participants can participate in real time." This collaboration highlights a proactive approach to adopting cutting-edge technology for public service. The core of this initiative involves publishing cryptographic hashes of the GDP data. These hashes act as unique digital fingerprints, providing an immutable record that ensures the integrity and authenticity of the economic information. Although the initial scope is limited, the Commerce Department has indicated that President Donald Trump's administration plans to expand this program further. This forward-thinking strategy underscores a commitment to leveraging blockchain for enhanced transparency and security in government operations. Commerce Secretary Howard Lutnick reportedly championed this project, informing President Trump earlier this week about issuing statistics via blockchain, emphasizing Trump's status as the crypto president. Lutnick has previously expressed interest in reforming GDP reporting, suggesting the exclusion of government spending's impact. This perspective aligns with a broader trend of reevaluating traditional economic metrics in the digital age. This initiative starkly contrasts with the previous administration's approach. Under former President Joe Biden, regulatory bodies maintained a cautious stance on cryptocurrencies, often engaging in disputes with exchanges and imposing restrictions. In contrast, the Trump administration has rapidly integrated Bitcoin into its policy framework. Since taking office, President Trump has been instrumental in establishing a U.S. Bitcoin reserve, acquiring assets like Ether and Solana, signing legislation to regulate stablecoins, and appointing regulators favorable to the crypto industry, thereby concluding enforcement actions against major players like Coinbase. The Trump family's engagement extends to supporting ventures such as World Liberty Financial, deepening their presence within the digital asset ecosystem. The increasing political influence of the crypto industry is undeniable, with firms making substantial donations to Trump's re-election campaign and contributing over $133 million to super PACs supporting pro-crypto candidates in the 2024 election cycle, according to data from Open Secrets. This financial backing reflects a growing alignment between the crypto sector and political interests. By utilizing public blockchains, the Commerce Department joins a growing list of government agencies exploring the potential of crypto technology. For instance, the Department of Homeland Security has investigated blockchain applications for airport passenger screening, and California's Department of Motor Vehicles has digitized vehicle titles on the blockchain. These examples illustrate a broader governmental interest in the efficiency and security offered by distributed ledger technology. As President Trump solidifies his image as the crypto president, the adoption of blockchain for distributing critical economic data like GDP signifies a profound shift in U.S. economic policy. This move further cements Bitcoin's position as a formidable political and financial entity within Washington, D.C., potentially paving the way for wider adoption of blockchain technology in public administration. Hold on tight, because the momentum is building, and the next story is equally explosive. We're about to dive into how a major crypto player, with some very high-profile backing, is set to make its grand entrance onto the public market. Trump's Sons-backed miner set for Nasdaq debut. In a significant move for the digital asset industry, American Bitcoin, a prominent U.S.-based Bitcoin mining company, is preparing to go public on the Nasdaq Stock Exchange. This highly anticipated listing will occur through an all-stock merger with Griffin Digital Mining, a transaction that has garnered attention due to its high-profile backers. President Donald Trump's two sons, Eric and Donald Trump Jr. Asher Genoot, CEO of Hut 8, which currently holds an 80% stake in American Bitcoin, informed Reuters that the merger is nearing finalization. The company aims to commence trading on Nasdaq in early September under the stock ticker ABTC. Genoot also revealed that anchor shareholders for the impending merger have already been secured, indicating strong initial investor confidence in the venture. Hut 8, along with co-founders Eric Trump and Donald Trump Jr., will collectively hold a substantial 98% ownership of the newly formed entity, highlighting the significant influence of these key stakeholders. The decision to pursue a merger rather than a traditional initial public offering, IPO, was strategic. Genoot explained that a merger was deemed more advantageous for financing, stating, "Instead of going public directly via IPO, we thought that there was a lot more advantages to financing if we had an existing company that already had access to different financing too." This approach suggests a calculated effort to leverage existing financial structures for a smoother and potentially better-funded market entry. Eric Trump's current activities further underscore the company's global ambitions. He is reportedly in Hong Kong and plans to travel to Tokyo to attend an event hosted by Meta Planet, a Japanese firm focused on Bitcoin treasury management. This international engagement aligns with American Bitcoin's strategy to expand its global business operations. The Financial Times previously reported that American Bitcoin is actively seeking crypto asset acquisitions in Hong Kong and Japan, aiming to broaden its international footprint and provide investors with access to publicly traded Bitcoin assets outside the U.S. Genoot noted that while these expansion plans are in their early stages and no definitive acquisitions have been made, the company is actively exploring opportunities. This proactive approach to global expansion could position American Bitcoin as a significant international player in the Bitcoin mining and digital asset sector. This strategic shift for Hut 8, which has transitioned its business model from primarily crypto mining to focusing on energy infrastructure and data centers, coincides with the launch of American Bitcoin and the involvement of the Trump brothers. This pivot suggests a broader vision for the company, integrating digital asset operations with robust energy solutions. The broader context for this development is the significant resurgence of interest in Bitcoin, driven partly by President Trump's evolving stance and pro-crypto agenda. After expressing skepticism during his first term, Trump has increasingly embraced the digital asset space during his 2024 campaign, actively seeking and benefiting from the crypto industry's financial support. This political shift has contributed to a renewed optimism among investors, helping to propel Bitcoin's price to record highs this year. The impending Nasdaq listing of American Bitcoin, backed by influential figures, represents a significant milestone. It not only reflects the growing mainstream acceptance of cryptocurrencies, but also highlights the increasing intersection of traditional finance and the digital asset world, particularly with the political backing from a former president's family. Stay tuned, because the innovation doesn't stop there. We're heading over to the Solana network next for a major announcement about yield-bearing Bitcoin tokens. Lombard launches $1.5 billion yield-bearing Bitcoin token on Solana. Lombard Finance has officially expanded the reach of its innovative yield-bearing Bitcoin token, LBTC, by launching it on the Solana blockchain. This strategic move introduces LBTC to one of the most dynamic and rapidly growing smart contract networks in the industry, significantly increasing its circulation and accessibility. The SBL-formatted token is fully collateralized by actual Bitcoin and offers holders an attractive annualized yield of approximately 1%. With over $1.5 billion already issued across various blockchain networks, this launch on Solana marks a substantial step in broadening the utility and adoption of tokenized Bitcoin. The LBTC token operates on a robust security framework, underpinned by a decentralized validator consortium. This consortium provides real-time proof of reserves, a critical feature that allows users to earn yield on their Bitcoin holdings without relinquishing custody of the underlying assets. This innovative approach to yield generation addresses key concerns around security and control in the decentralized finance, DeFi space. Since its initial debut earlier this year, LBTC has demonstrated remarkable growth, achieving $1 billion in total value locked, TVL, within a swift 92-day period across networks such as Ethereum, Base, Sway, and BNB Chain, according to official project disclosures. This rapid accumulation of value highlights strong market demand and confidence in the token's model. On the Solana network, LBTC is poised to become a foundational asset within its burgeoning DeFi ecosystem. It is immediately available for trading on major decentralized exchanges, DEXs, and can be seamlessly deployed as collateral across leading DeFi platforms, including Jupiter Exchange, Camino Finance, Drift Protocol, and Meteora. Lombard Finance asserts that this expansion onto Solana is a deliberate step towards establishing its platform for Bitcoin liquidity as integral to the crypto ecosystem, as stablecoins are to dollar-denominated transactions. By integrating LBTC into Solana's high-throughput and low-cost environment, Lombard aims to unlock new use cases and enhance capital efficiency for users. The introduction of LBTC on Solana is particularly significant given Solana's reputation for fast transaction speeds and low fees, making it an attractive venue for DeFi applications and asset integration. This move could attract a new wave of users and liquidity to both LBTC and the broader Solana ecosystem, fostering greater interoperability and innovation. The ability for users to earn yield while maintaining custody of their assets, coupled with the token's broad utility as collateral and tradable asset across multiple high-profile blockchains, positions LBTC as a compelling instrument for both seasoned DeFi participants and those looking to gain exposure to yield-generating Bitcoin in a secure and accessible manner. The project's commitment to transparency through real-time proof of reserves further bolsters trust and confidence among its user base. As the tokenized Bitcoin market continues to mature, initiatives like Lombard's LBTC launch on Solana are crucial for driving adoption and demonstrating the practical benefits of bringing real-world assets onto the blockchain. The success of LBTC in attracting substantial TVL across multiple chains, and now its expansion to Solana, signals a growing trend of institutional and retail interest in yield-generating digital assets that are fully backed by underlying collateral. But what does all this activity mean for the market? We're about to break down the subtle signals in Bitcoin's trading activity that could point to the next big move. Bitcoin's market signals: short-term cooling meets long-term strength. Bitcoin's market dynamics are presenting a fascinating dichotomy, with short-term trading activity showing signs of cooling down, while the base of long-term holders continues to expand. This divergence raises critical questions about potential tipping points and future price action for the leading cryptocurrency. The current market phase for Bitcoin suggests a complex interplay between immediate trading sentiment and the conviction of sustained investors. While the frenetic pace of daily transactions might be decelerating, indicating a potential pause or consolidation in short-term speculation, the underlying strength of long-term holders remains robust. This persistent accumulation by those with a longer investment horizon could be a key indicator of underlying stability and future growth potential. Analyzing these contrasting trends requires a deep dive into on-chain data and market behavior. Short-term activity, often measured by metrics like daily active addresses, transaction volumes, and the velocity of coins moving between wallets, can reflect speculative interest and immediate market sentiment. A cooling in these metrics might suggest that short-term traders are becoming more cautious, perhaps waiting for clearer signals or new catalysts before committing further capital. This could manifest as lower trading volumes on exchanges, reduced chatter on social media platforms focused on rapid gains, or a general sense of market indecision. Conversely, the expansion of the long-term seller base, or rather, the hodler base, is a testament to the enduring belief in Bitcoin's long-term value proposition. Metrics such as the number of addresses holding Bitcoin for over a year, the total amount of Bitcoin held in such long-term wallets, and the net position change of these holders can paint a picture of conviction. An increasing number of long-term holders suggests that more investors are choosing to accumulate and hold their Bitcoin, potentially viewing current price levels as attractive entry points for future appreciation, or simply as a hedge against traditional financial system uncertainties. This dynamic creates an interesting scenario for bulls. If a significant portion of Bitcoin supply is being locked away by long-term holders, it reduces the available supply on the market for short-term traders. This scarcity, combined with potentially renewed speculative interest driven by positive macroeconomic factors or regulatory developments, could create upward pressure on prices. The key question is whether the current cooling in short-term activity is merely a temporary pause before a renewed surge, or if it signals a broader shift in market sentiment that could challenge recent highs. Analysts are closely watching for any signs of capitulation from long-term holders, which could signal a downturn, or conversely, for a resurgence in short-term momentum that could indicate a breakout. The resilience of the long-term holder base, however, provides a strong foundation, suggesting that any short-term dips might be seen as buying opportunities by a significant segment of the market. The ultimate trajectory will likely depend on the interplay between these two forces and the broader economic and regulatory environment. Understanding these nuances is crucial for navigating the current market. The strength of conviction among long-term investors provides a buffer against volatility, while the potential for renewed short-term interest remains a key factor for upside potential. The market is at a juncture where the patience of HO dealers could be rewarded if speculative interest reignites. And that's a wrap on today's Deep Dives. But before you go, let's quickly recap the biggest headlines that rocked the crypto world today. And that's a wrap on today's Deep Dives. We saw the US government officially publish GDP data on the Bitcoin blockchain. A major mining firm backed by the Trump sons is set to go public on Nasdaq. Lombard Finance launched a massive yield-bearing Bitcoin token on Solana, and we analyzed Bitcoin's cooling short-term activity versus its expanding long-term seller base. Don't forget to like this video, subscribe to Bitcoin Bulletin for all your crypto news, and hit that notification bell so you're always in the loop. Also, follow us on all our social media channels for more updates throughout the week. We'll see you in the next one.